very good afternoon to all our viewers. You have tuned into Market Fatafat on ET now. I'm Shrishti Sharma and with me Cheryl D'Souza. And viewers, this is the show where in the next 60 minutes or so we will tell you all the counters that are buzzing in trade today, and we'll also get you the stocks that are on the radar of our technical experts. So let's get started. But firstly, let's have a look at what the markets are up to. So Cheryl, a day to record, wherein once again a life high levels coming in for the Nifty 50 index, but it has been volatile after we started the day.
Absolutely, and rightly said, Shrishti, a very good afternoon to you. Yes, it's been a very volatile trading session when it comes to the benchmark indices. Broader markets have been in the negative territory since the word go. Remember, the broader markets have been hitting record high day after day, but today is not a great day coming in for the broader markets. Mid-cap as well as small-cap index hovering in the lowest, near the day's lowest point. In fact, mid-cap index has seen the biggest intraday fall since December 2022. Talking about the benchmark indices, then yes, we did start firmly in the positive territory above the 20,000 mark, and through the intraday trading session, we have been actually breaching those levels on the downside. Right now, we are tad bit above that 20,000 mark when it comes to the Nifty. Let's talk about what the rest of the market is doing, and we cannot not talk about the Nifty Auto Index because Shrishti, over the last 1 hour, to be very precise, a lot of news flow has been pouring in when it comes to the auto index. You had Nitin Gadkari at the SIAM conference say that they are planning to put forth a proposal to actually impose an additional 10% GST when it comes to diesel vehicles. They plan to put forth that proposal to Finance Minister this evening. But now we've got a clarification that has in fact come in on the social media platform that is X by Nitin Gadkari. And what exactly is the clarification, and what's the reaction now that we are seeing actually on the stocks?
Well, yes, a big news coming in for the auto sector, Cheryl. Like you rightly said, that Nitin Gadkari said that he's going to be proposing additional 10% GST on the diesel vehicles as well as diesel gensets. And that's why we have seen all these auto companies having the major exposure to the diesel segment falling in trade. But a clarification just a while back coming in on the platform X where he says that no such active proposal is in consideration as of now. No such proposal currently under active consideration by the government. Today evening he'll be meeting the FM, and then this will take in forward. But this is in line for its longer term goal, which is to actually reduce the dependence on the diesel. So that's the clarification, and that's why we are seeing some of the auto stocks recovering as well. But the key to note and the key to highlight is all the counters that have a major proportion coming in from the diesel side. Case in point being M&M, which has 70 to 80% contribution coming in from their diesel side. Diesel SUVs as well as Tata Motors from the passenger vehicle side have more than 18% contribution coming in from the diesel side, as well as overall 25% contribution is what we understand, including the commercial vehicle side as well. When it comes to some of the other companies like Cummins as well as Bosch, they not just provide diesel engines, they have exposure to that, but they also are into diesel gen pack. So they have around 30 to 40% contribution coming in from the diesel side. So all these counters are in focus, and more clarity is required whether commercial vehicle will be in this gambit or not, whether these companies will be included. But definitely stocks like Ashok Leyland, Eicher Motors, they are also reacting too. So that's the news coming in on the auto space. A big statement made by Transport Minister Nitin Gadkari, but a clarification on that coming too as well.
Absolutely, a very essential and need of the hour clarification, a very timely clarification actually coming in from the road minister on this particular front. And you can see some sort of recovery actually creeping for most of these auto companies. So if you look at M&M is off the day's lowest point, so is TCS, I beg your pardon, Tata Motors as well as Ashok Leyland. All of them are actually recovering from the day's lowest point as we speak. So is the auto index as well, seeing some sort of a recovery come in. But on that note, actually, let's kickstart with the show then and get to, apart from auto stocks, which are the other stocks that are in focus. And to take us through that journey, we have Kunal Bothra, who's joining us on the technical front, while on the research end, we have Amakshi as well as Ashesha joining us today. A very good afternoon to all three of you. And Kunal, let me talk about a stock that has actually been bucking overall market weakness today, and that has to be TCS. Where do you see TCS headed from here on?
So Cheryl, TCS and most of the large cap IT names are showing very good strength for themselves today. You can call it relative outperformance, or you can call it possibly the comeback of defensives, the erstwhile defensives, as they used to call and I think TCS has also managed to come back above the previous resistance of 3,500 it's in process of now confirming a breakout on the short-term chart. So looks very attractive, and if the entire market gets into this profit booking zone, say for the next couple of days, it's bound to be that stocks like TCS and other large cap IT names, they could see some renewed buying going forward as well.
So that's the take coming in on TCS, and that's the reason why this particular counter is in focus. But let's talk about Laurus Labs, and that particular counter is actually sulking in today's trading session. Why is Laurus Lab actually seeing that sort of a downtick is because of a brokerage note that has actually come across on that particular counter, where the brokerage has actually flagged off a weakness in the core business coming in for Laurus Lab. So you basically have a note that is actually coming from Kotak Institutional Equities, where they've downgraded the stock to a sell rating now from a reduced rating earlier, where the target is now unchanged at around 300 rupees per share, which is significantly lower from the current market price when it comes for Laurus Labs. What they are actually saying that they've also cut the earnings estimate for this for fiscal FY24 to 26 for Laurus Lab of 5 to 7%. This on back of the lower sales as well as margins. What they're saying is the valuation in the synthesis segment is difficult to justify when it comes to Laurus Labs, and they're saying that the weakness in the company's core business over the past 2 years is certainly unsettling, and that's the reason why they've gone ahead and further downgraded their view. They've downgraded the stock now to a sell rating from an erstwhile reduced rating. Target is actually stay put at 300 rupees per share, and Laurus Lab, as you can see, down approximately 6% as we speak.
Okay, moving on to the next counter there, and from the Nifty 50 pack, you can't take your eyes off L&T, supporting the market, supporting the index, as well as gaining in trade. Vamakshi, tell us more. Why is that gain we are seeing on L&T?
Well, yes, Srishti, with the markets, L&T has also hit its fresh record high today. L&T has hit its record high after the company raised the price for its share buyback. It has raised its share buyback price from rupees 3,000 per share to 3,200, and L&T has cited the present market sentiment as a catalyst for the increase in the price. Now, besides increasing the buyback price, the company has also gone ahead and approved reducing the number of shares that will be bought back from investors to 3.12 crores, which represents nearly 2.22% of equity. Now, analysts also largely point out that L&T is back on the path of return on equity enhancement with the buyback as well as dividend to raise its return on equity by nearly 90 basis points. Now, CLSA has also said that the FY24 buyback of the company will not be the last. Now, keep in mind that this is the first buyback that L&T actually announced since its listing, and in fact, CLSA has also reiterated its buy rating on the stock. Target price of 3,080 is what they have given, and they are betting on 5 mega trends of urbanization, climate change, mobility, digital, as well as societal change, as well as sustainability. So, given all these factors, but importantly, L&T has raised its buyback price from 3,000 to 3,200, and that is the reason why the stock is soaring in the trading session today.
Alright, that's L&T that has hit a fresh record high levels in today's trading session, and Vamakshi exactly telling us why this particular counter is in focus. But Shesha, let's talk about LG Equipment, and why is this one in the spotlight?
Yes, it is on the back of an update that has come in with respect to an order win. The stock is slightly off the highest point of the day, but despite that, holding on with gains of nearly 5% as we speak. So remember, it was in the month of July when the company said that they are in receipt of order or receipt of letter of award is what they had received from Siemens, and this was for supply and maintenance of air generation and treatment units and aux compressor. Now, yesterday, company has issued an update with respect to this order win, where the company has said that they have now signed the letter of intent with Siemens Limited. This is for supply and maintenance of air generation. The order is required to be executed by the company over the next 10 years and maintenance over the next 35-year period after the supply ends. So, on the back of this order win and the fact that the company has now signed the letter of intent, the stock is in focus today, gaining nearly 5% as we speak.
Okay, moving on, let's shift focus to what's happening with Indiabulls Housing Finance. And Kunal, this counter is on your radar, and what a move that we have seen in this particular counter. With the retracement with the markets, what's your outlook on Indiabulls Housing Finance?
Well, yes, the stock which had done exceptionally well in the last 3-4 months, I think from the March or April lows, the stock was almost at 90-91 rupees to a point when the stock had crossed the 200 mark. It's been a stellar recovery for Indiabulls Housing. Now the stock from 200 levels is corrected back towards 174, which means a correction of more than 15% has already seeped into the stock price approximately. So that generally indicates that maybe the near-term outlook for the stock could start to get into a bit of an oversold territory. Looking at the charts and the way the setup is for the hourly indicators for Indiabulls Housing, my expectation is that in case if the stock doesn't fall below that 165 mark, that could actually be a near-term bottom in place for the stock price. So expecting a bounce on Indiabulls Housing from current levels, and in case if the stock doesn't break that 165 mark, we can see a very strong recovery for the stock over the very near term.
Alright, let's move on. Let's talk about Lupin, a stock that has hit actually a 2-year high on an intraday basis. If you look at the stock, it hit a highest level since July 26, 2021. No doubt it's given up some of this gain, still holding on to positive territory. That's Lupin for you. The stock also intraday basis saw biggest intraday jump since August 3rd when it saw an uptick of as much as 4%. The reason why Lupin is in focus is the fact that the company has said they plan to enter into a business transfer agreement with unit Lupin Manufacturing Service Solutions to carve out 2 active pharmaceutical ingredients, that is API manufacturing sites at Dabasa as well as Vishakhapatnam, and select R&D operations including fermentation at Lupin Research Park in Pune. The consideration for this particular deal is at around 750 crore rupees to about 850 crore rupees. And on back of this particular pack that they have for the manufacturing sites, you can see Lupin that's hit a 2-year high on an intraday basis, holding on to gains in a rather volatile market.
Okay, that's the update on Lupin, but let's shift focus to what's happening with Reliance now, as KKR has gone ahead and invested over 2,000 crores in Reliance Retail Ventures Limited, and that's the update coming in on Reliance. The stock did start the day in the green, but now seem to be drifting lower. What KKR has done in Reliance Retail Ventures is now their stake has increased from 1.17% to 1.42%, and that's the update. We have seen so many investors in the past 2 to 3 months coming in Reliance Retail Ventures, and KKR is the latest addition to that, with an additional stake buying into this particular segment, and that's the update on Reliance. But nevertheless, the stock is putting pressure onto the markets as well. As of now, it's trading with a cuts of 1.3%.
Alright, so that is Reliance Industries for you, actually dragging the markets or putting pressure on the markets. But Kunal, ITC, do you see this one coming out of the consolidatory phase now and actually get prepared for the next up move?
It's very much possible, because when the market gets into that defensive tilt, many of these FMCG names, the IT stocks, example healthcare, pharma, these are the kind of stocks which generally tend to see a lot of buying, because the expectation is that at least these stocks would not get into a sharp correction. And the best part is that most of the FMCG stocks, even ITC has already gone through in the last 1 month a correction of in the tune of 10% to 15% on average for many of the other FMCG names. So that also adds to the cushion of safety that maybe these stocks may not go into an aggravated sell-off in case if the market gets into that second round of correction. So I think that's one of the other reasons for flagging of ITC. The stock forming a decent base at the 440 mark. For the last 2 weeks, it was holding on to this 440 levels, and now it's come back about that 450 mark. So if there is any round of short covering or covering from the call writers at the 450 strike, we could see a heightened pickup of price action for ITC. So a stock which has to be on traders' radar from a short-term view.
Okay, moving on, and let's shift focus to what's happening with BEL. Vamakshi, you have picked this particular name. Tell us why is that so, and what's the buzz around this one?
Well, yes, this stock, as you can see, is trading under pressure today. As you can see on your screen, it is down nearly 6.5%, and that is on the back of a brokerage note that has come in from Axis Capital. Now, Bharat Electronics is in focus after Axis Capital believes that the company is targeting to deliver mid-teen revenue growth CAGR from FY25 to FY26. The revenue growth and margin trends, margin targets rather, that have been shared by the management over the medium term are already factored in, is what Axis Capital believes. yields. Now, as far as the inflow is concerned, for FY23 they did see a growth of almost 8%, but for FY24 their guidance calls for no growth at all. Now, post FY24 an earlier uptick in inflows could be seen. There could be a shorter execution cycle, and these two factors will be essential if the company is expected to achieve nearly 15% top line CAGR over FY25-26. Now, when we talk about the valuations for this counter, the valuations are at a lifetime high. When we look at the 1 year forward PE, it trades at nearly 28 times, and this in turn is nearly 2 standard deviations above the mean. So definitely high valuations is one of the main reasons why Axis Cap has gone ahead and downgraded its rating on Bharat Electronics from AD to reduce. However, they've slightly increased their target price from 139 rupees to 143 rupees per share.
All right, moving on. Ashesha, Sham Metallics, why is this one in the spotlight today?
So their offer for sale is underway. Yesterday it was open for non-retail shareholders, and today it is open for retail shareholders. The stock was down 3.5% yesterday, seeing a cut of another 2.5% today. Remember, the floor price was fixed at 414 rupees per share, indicating a discount of about 11.5% to Friday's closing price. So on account of this offer for sale, the stock is declining for the second consecutive session. Two promoter entities, Narantak Dealcom and Shubham Buildwell, are reducing their stake in the company. And yesterday evening, the company also said that they will be exercising oversubscription option, which represents 1.2% of the paid-up share capital of the company. Remember, this is in addition to the base offer of about 5.11% of the total paid-up share capital, and hence total offer size now stands at 6.3% of the share capital of the company. So on account of this offer for sale, the stock is in focus for the second consecutive session, declining 2.5% today.
Okay, moving on, and let's shift focus to the big talking point, that is autos. But Kunal has picked up a safer bet, that is from the two-wheeler space. Kunal, Bajaj Auto is on your radar. Tell us how are you seeing the charts right now, and what sort of levels that you're watching out for?
For relatively, Srishti, but in market sell-offs, nothing is safe. We expect that when the stock goes into correction, when the market goes into correction, even the high beta stocks and the moderate beta ones, they correct sharply. Now, the reason for flagging of Bajaj Auto is the candlestick pattern today which the stock is forming. Now, even after an initial correction or a round of correction for the stock and a comeback towards the slight positive territory for Bajaj Auto, the stock has made a bullish hammer kind of a candlestick pattern so far. So, in case if the stock, say in the next couple of hours, manages to cross back above the previous intraday highs of 48.50 approximately, then I believe that this could be a sign of a strong confidence coming into this two-wheeler stock. So we've already seen four-wheeler names like Maruti, M&M, etc. looking quite strong. If Bajaj Auto also manages to pick up price action and breaks past above 48.50 levels, I would expect the stock to come back towards at least the previous highs of 4,900, 950 mark over the next couple of days.
Alright, so that's the day coming in on Bajaj Auto, but let's move on and let's talk about SpiceJet, because this one is actually plunging in today's trading session. If you look at SpiceJet, it was down approximately 9% last time I checked. Right now the stock is down approximately 6%, and because the company on Monday said that it would pay about $1.5 million to Credit Suisse in a case related to unpaid dues. They also said they will go ahead and complete the payment of around 100 crore rupees each to Kalanidhi Maran as well as Skull Airways by September 12th. This decision actually comes because you had various airlines that are actually going ahead and actually cutting their plane services as well, but that's not one of the reasons why. This is primarily the reasons why SpiceJet is actually under pressure in today's trading session. Remember, in February 2015, Maran as well as Skull Airways had transferred the entire 58.46% stake in SpiceJet to the co-founder Ajay Singh, and subsequently Maran accused SpiceJet as well as Singh of breaching the agreement by failing to issue him about 18.9 million share warrants and preference shares. And in 2016 order, the Delhi High Court had said that Maran was eligible to receive about 579 crore rupees and referred the dispute to an arbitration panel. So yesterday you had the court order, and which today in fact SpiceJet also said that they will go ahead and make the payment of around 100 crore rupees by September 12th. So on back of that particular development, you can see what is happening to SpiceJet. The stock is actually under pressure in today's trading session, 6% downtick right now.
Okay, well, moving on, let's shift focus to what's happening with another company from the Bajaj Group, that is Bajaj Finance. And Kunal, this one too is on your radar. Tell us how the chart's looking like for Bajaj Finance and what are you spotting there?
It's about the 50-day moving average. In fact, Srishti, over the last 1 month or 2 months, when the stock went into a rise till 7,800, then a correction towards 6,800, these averages have actually played out pretty well for Bajaj Finance. The stock or the sell-off or the recent correction actually halted almost exactly at the 200 DMA or the 100 DMA for Bajaj Finance, which was at the 6,800 mark. That was in the mid of the month of August. From there, the stock has now climbed back above the 50-day moving average. And the best part is that if the market gets a lot more volatile and the mid caps and small caps see profit bookings, we would probably see these large cap stocks witnessing buying. So Bajaj Finance looks attractive. This 50 DMA could be kept as a good closing based stop loss for short-term traders, and expecting the stock to rally to 7,550, 7,650 mark, say over the next 1 week.
Okay, moving on, and from the banking space, let's have a look at what ICRA Bank is doing. The stock was holding itself in the green since the start of the day, and now I believe it's having a gains of 0.7%, and that's after on the back of the announcement that RBI has approved the reappointment of Mr. Sandeep Bakshi as the Managing Director and the CEO of the bank, and this will be in effect from 4th of October 2023, and he will be the top boss till October 3rd, 2026. Do remember that the shareholders have already approved the appointment of Mr. Bakshi for this period at the AGM, and now RBI has gone ahead and approved the same, and this is definitely taken positively by the investors as well. And you can see the stock, despite the fact that the Bank Nifty has been quite volatile throughout the day, ICICI Bank didn't give up his gains and still holding a gains of 0.7%.
All right, moving on, Kunal, let's talk about HDFC Bank then. And do you think that the underperformance that HDFC Bank has been actually posting versus peers, versus the rest of the large cap players, is now set to end, and this one is set for the next leg of rally?
It's very much like, because the stock has managed to retrace quite impressively in the last, I think, one and a half odd week. From 1560 mark, the stock has now come back towards 1635 levels. So in terms of percentage gains, it could be very meager. But remember that HDFC Bank holds a lot of weightage on the Bank Nifty as well as on the Nifty 50. So the movement of HDFC Bank has a direct correlation with respect to how the index, constituents or the weightage on the index, it tends to have a strong impact on it. Now, if HDFC Bank manages to cross back about that 1650 mark, which I believe is a very important and critical breakout psychological point for HDFC Bank, then we could be looking at a next target of 1700 to 1750. So a gradual mover, a steady mover over the last 1 or 2 weeks, and I believe that it's also heading towards a breakout about that 1650 mark.
The technical take coming in on the banking major HDFC, but sticking with bank, let's also get you a top voice of the markets. Today we spoke with Sunil Singa of Abacus managers, where he believes that the banks will outperform the Nifty in the next 6 months, and he also shared his take on the infra space. So let's go ahead and listen to him.
I would be in that camp which would say that in the next 6 months, banks should outperform the Nifty. And particularly, everyone is becoming so excited about the public sector companies. I would say public sector banks have underperformed big time, and a lot of these banks are now trading at like P's of anywhere between 4 to 6 times. So maybe there is a decent enough opportunity there from a 6-month to 1 year perspective. So, to build infrastructure, you need EPC guys, and obviously the order books for a lot of these guys have been at record highs. I think now the companies which have survived have proven that they are the ones who are cleaner, who have a better balance sheet in terms of their debt equity ratios, and who are focused also on doing what they know right. So there is opportunity. At the same time, this is a sector which is very difficult to fundamentally analyze from a balance sheet perspective. It's very, very difficult to figure out the free cash flow and so on and so forth, because the working capital cycles are very, very long. And therefore, though we have been, decent sized investors, we restrict our exposure to these companies to less than 10% of our fund size. But we do believe that over the next 4-5 years, if railways is going to do so much work, if there's going to be so much work on roads and airports and so many other different things, water, there is big opportunity for good companies here.
All right, that's take coming in from Sunil Singa, but let's stick with the financial space. And Vamakshi, L&T Finance, why is this one in focus?
Yes, when we look at the stock earlier in the day, it did see a spike up, as you can see, but it has fallen down from that from the day's highest point. Now, earlier in the day, we did have reports from agencies that were indicating that Bain Capital was seeking nearly 850 odd crores for 6.5 crore shares of L&T Finance. The floor price for this deal, as per agencies, had been set at 129.72 rupees per share, and this price represented a discount of almost 0.75% to the last closing price of the stock. Now that has indeed transpired. We did see a spike up, and that was mainly on account of the block deal that took place. 7 crore shares changed hands in a punch trade. This actually represented nearly 2.8% of the equity. Now definitely the buyers are not immediately known, and we will be waiting for those details. But after that block deal did take place, we did see the stock rally in trade. But apart from that, the stock is now trading at the day's lowest point. As of now, the stock is down nearly 2%.
Okay, moving on, and let's shift focus to what's happening with Indigo. Shesha, you have picked this particular counter. Tell us what's the news flow that you are picking in this one.
Well, yes, JP Morgan in fact has come out with a note where they are maintaining their overweight stance on the stock, but they've gone ahead and hiked their target price marginally. Earlier, the target price stood at 2,700. Now they've increased it to 2,880. So JP Morgan says that supply tightness will keep industry load factors elevated at about 87-88 odd %. Fuel costs matter in the short term, but they believe that pricing appears on the right path and pricing appears rational over the next couple of years. Until they also say that unit costs, excluding fuel costs, will moderate in the time to come, and strong balance sheet will help the company expand their market share position and will also help the company in increasing their capacity going forward. So on the back of this note, the stock is in focus. They are maintaining their overweight stance. 2,880 rupees is the target that they've given, and the stock currently trades at 2,500 odd levels.
All right, on that note, actually we slip into a break on this edition of Market Fatafat, but stay tuned, more stocks to discuss on the other side, so don't go anywhere.